role for a gold standard?
No, because the gold standard might control. I see a need for going back to fixed exchange rates, like we're using what Keynes called the Bancor as a form of international currency rather than the American dollar. So I'd want to do that, and I'd want to have I want to go back to the idea of relatively fixed exchange rates, definitely, not the gold standard. But I'd see the sustainable level of private debt being of the order of 50% of GDP, not 3 times that, which is what it currently is in America and most of the world. And in terms of a sustainable government deficit, run it on like a permanent deficit basis, roughly the same as the rate of growth of nominal GDP, which would be of the order of 3 to 5% per annum. Because again, if you think about the economy expanding at, say, that's 5% per annum, that normally means an expansion in the money supply of much the same scale, because it's an increase in the monetary value of output. Okay, that's going to be financed partly by private debt and partly by government deficit, or should be by government deficit creation. So banks creating money at the rate of 5% per annum, government creating money at much the same rate. I think that's sustainable of that level. Yeah.
I think that's right, but to quote the great philosopher Yogi Berra, theory works in theory and practice works in practice, and the difficulty with Steve being right is eventually government somewhere would, one of them would break ranks, because that's what always happens.
Well, that's why you need to have a Bancor type relationship, because part of the Bancor was 2 parts of the Bancor. One was that you had to convert your currency into the Bancor for international trade. Second was that if you ran a deficit, you'd run out of Bancor, so you'd be forced to devalue. But if you ran a surplus, part of the Bancor mechanism was the surplus would be part of it would taken off you by the international monetary exchange system and spent. It was actually a balancing mechanism, which we don't have these days. And the decision that the Americans pushed through at Bretton Woods to have the American dollar as the reserve currency was one of the most stupid things America's ever done. I know that's a tough ask to rank that.
We do have quite a lot of Americans here tonight, Steve.
I know. It's one of my ex-partner of mine once in a stage show with the name of, what's a great country like you doing in a state like this?
Okay, thank you. Time for one last question. Okay, being as nobody else put their hand up, David, we'll come back to you then for one more.
Have we got time for a David question?
I think a problem with economics is they have a common problem with other thinking, like politics, or that we have become a lot more people, particularly the baby boomer generation, have put ideological blinders on. They're fixated with one thing. And so we've lost a lot of objectivity. And I think putting some objectivity in any form of thinking, line of thinking, will help. And I wanted to get help reconciling, you mentioned that economics failed to predict the last crisis. And I wanted to hear your views on what were some economic indicators before the crisis that might help us. And I just want to share briefly that my experience, I was at SunTrust Bank, which was the only major U.S. bank before the crisis to actually drop mortgage-backed securities.
Oh, right.
And what happened was I was on the trading desk, and it was always frustrating because we couldn't manage our risk because there was regulations in place saying we couldn't communicate with the retail side of the bank who hold all the mortgages, hold the mortgages. So we couldn't manage our risk properly internally. So that's ultimately what we decided to drop. And to me, the crisis was more of a regulatory problem. But maybe, to me, from my viewpoint, it was more a regulatory problem because, and it wasn't too much regulation or too few. There was too much regulation as far as being able to communicate and manage our risk. Too few as far as letting people just, it wasn't transparent.
When I look at the level of private debt in America, it was rising from 1945 on. Yeah. I don't think regulatory favour was the constant over that whole period. I think it was bankers make profit by creating debt, and they over time gradually went from creating too little to creating too much. So regulation was to me a second order or third order impact. It's but to me the indicator was the rate of change of private debt, and that'll be the indicator this time around as well.
Because what we saw at SunTrust was that you know, every year from 1991 to 2005, all the major, the chairman of all the major banks in the U.S. made an annual pilgrimage, of course you won't hear this in the media, made an annual pilgrimage to Washington, D.C. and begged the oversight committees and to regulate the thing, because there's a tragedy to commons thing. And what SunTrust happened to SunTrust is a perfect example. We dropped mortgage-backed securities, and the value of our stock went down a third within 3 months.
Yeah.
Because now we lost all of our corporate clients because we couldn't customize, you know. And so it was a tragedy of common sense. We really needed regulators to say, look, you have to.
I think I've been told what a David question is.
Yeah.
We better stop
David,
with that
we
because
are
I've
out of
got to go
time.
do an interview in 10 minutes' time.
I'm
Steve's
sorry,
got a
but what
meeting now.
economic indicators immediately before the crisis could show the same thing that I was seeing from another viewpoint?
Yeah. Well, the change of debt is the indicator, and the acceleration of debt. And on that note, please help support IDEAEconomics, and I would also like to get some backing for my Minsky software, which you can do through my website too. Thank you.
Guys, just before we thank the two people up front, you'll see in front of you that there's an MBMG feedback form. As I say, we've sponsored this event, so we'd like to hear what you think. If you've got any questions for Steve, unfortunately he's not going to be around after the event. He's got an interview with the media. So if you've got any questions that you'd like answering, please put them on those forms. Let us know what you'd like to hear about in future. And I'll end it with saying, Steve Keane, Paul Gambles, thank you very much.
Thank you. Okay. Where have I got to go for the interview?